Welcome to Digging Deeper Ag Chats with Al, the podcast exploring the trends, challenges and innovations shaping agriculture. I'm your host, Alistair McCullough from the Gippsland Agriculture Group. Each episode, I'll chat with experts and producers to bring you insights and practical advice from soil to livestock. We'll be digging deeper to keep you informed and ahead of the game. So let's get started. Welcome to Digging Deeper. Today we have a special guest all the way from Sydney. How you going, Paul?
Yeah, doing good, thanks. Thanks for having me.
You're from Rabobank. What's your actual title?
So I'm a Commodities and Farm Inputs Analyst there.
Rightio. And if anyone's listening, you notice you've got a bit of an accent. You're a long way from home.
Yeah, that's right. So not from Sydney originally. I'm from Wales, from a dairy and arable farm over there. And yeah, I moved to Sydney about a year ago now.
Right. So you grew up on farm?
Yep. That's right. So milking about 200. Back then, my mum's still running the farm. We got a little bit of arable and a little bit of beef as well.
Now, 200 cows over there, that'd be a reasonable size, wouldn't it?
Yeah, to be honest, that would be probably considered about a medium-sized farm. You do get a few mega herds there as well that can be sort of plus 1,000. But yeah, 200 is a decent-sized farm, sure.
And we also have Ellie Caldwell in the studio. Welcome, Ellie.
Thank you. Pleased to be here.
Now, Ellie, tell us a bit about yourself. A lot of people listening will know you, but tell us about yourself and your farming operations.
I live on a beef and sheep property here in East Gippsland.
And you're a local. You're born and bred?
Yeah. So we're back on my family farm, and I'm also a valuer a couple of days a week, which I think is probably relevant to why I'm here today.
So let's start off. Now, I've known about Rabobank for a long time, but I only recently heard about the origins of Rabo. Paul, can you tell us about the origins of Rabobank?
Yeah, absolutely. So I think what a lot of people don't realise is that Rabobank, it's a cooperative bank. So it was started by Dutch farmers in the 19th century. So effectively it was a cooperative that was set up, and really what you had was those farmers there, a lot in the horticulture space. They were trying to establish some credit, and they decided to set up the bank. So it's really got farming roots that go all the way back to the 19th century. So yeah, quite interesting. Yeah.
Now, is the original family still involved to some capacity?
I'm not sure if the original family is still involved to some degree, to be honest, but yeah, I do know that it's still sort of privately owned, yes. Yeah. Well,
I'm just going to say it is. We'll fact check myself later, but I thought that was a pretty a cool fact I heard recently in that as well. So, all right, let's get stuck into it. Ellie, you're up.
Excellent. Well, Paul, with what you hear today, you have just released the Australian Farmland Price Outlook 2025, a study done by Rabobank, by yourself. Looking at the big picture, farmland prices fell in 2024 after 3 years of strong growth. What do you believe caused that correction, and is there a significance for Victoria?
Yeah, exactly. So I guess firstly we look at that headline figure, like you said. So the big one there is a 6% decline in the median land price value. And we're always talking about the median land price when we talk about this report, because we want to know what's happening in the middle of that market. And yeah, we saw a 6% decline. That's following 3 or 4 years of really quite aggressive growth. If we look over the 4 years before that, we saw those median land prices increased about 79%. So just really enormous growth. So I think to answer your question, what potentially caused this? Well, if you go back past a couple of 2 years ago, for example, we had these really strong profit margins. We saw a lot of corporate activity. But now it looks like those profit margins are beginning to normalise. We're seeing commodity prices move down a little bit. We're still seeing farm inputs fairly elevated, such as fertilisers. And I think we're just seeing a little bit of a retraction in that profit margin, and that's filtering through into the land value space at the moment.
Okay. Fascinating. The back of a huge growth. Would you say over a long period of time that all evens out? Do you have a pattern of high growth and then it stabilises? And so if you analyse it over a 10-year average, will it jump sort of the same amount, you think?
Well, it's interesting, and if we sort of look back at history to try and answer that question, if you look before that period, which really kicked off in sort of 2020, when we began to see that really aggressive land value growth, if you go sort of pre-2020, land values were actually pretty flat. We didn't really see much growth for about a 10-year period from sort of 2010 to 2020. We had some economical issues, and we had the financial crash just before that. We had interest rates that were fairly elevated. It wasn't really a supportive environment, so we saw a bit of a slow sort of increase in those land values. And then we moved into this new period of really aggressive growth. which I think was quite unexpected in terms of the market. So my view is that potentially we're probably going to enter a new period over the next few years where we see more stagnant growth. I still think we will see some growth, but it will be slower. So I don't think it necessarily evens out. I think you see different periods in time which are really impacted by three factors. That's farm production, commodity prices, and interest rates, which of course can all be big alterations each year, potentially from weather, from geopolitical factors. So there's a lot going on that can drive those land prices.
Now, I'm a complete novice, that's why Ali's in here with me. So I'm going to ask a dumb question most likely. But land value prices, can we work out land value prices without sales? Or does it always have to be on the back of sales?
So the way we do it, so to say that we publish this report each year in May, and again we focus on that median land price value. So we are looking at specifically at transactions. So we're looking at sale transactions that take place within our data set. So the methods that we do it, predominantly we are focusing on that. There are potentially other ways that you could look at doing it, but that's sort of our methodology in terms of doing this, is looking at those transactions that take place. Those transactions, we do try and be very cautious in terms of what we're actually analysing. So we'll carefully look to see what best represents the agricultural market. So we're predominantly focused on three sectors. So we're looking at dairying, grazing, and arable. We'll try and remove anything which we don't believe is a fair representation of agricultural land. For example, if there's a property which is quite close to a city, potentially has some higher residential usage, then maybe we would remove that from the data we're looking at. In addition to that, we'll also remove hobby farming, so anything below sort of 40 hectares. So we're very cautious to try and really capture just what's happening in terms of growth in the agricultural land by just looking at those specific transactions.
Excellent. In 2024, your report indicates you saw fewer sales over the $10 million. Is there a price bracket, or are there price brackets in the market that are identified from your analysis, and what does that signal in a shift as to who's buying the land? Is there a more active bracket there?
Yeah, so it's an interesting question. We definitely saw a slowdown in transactions overall, I'll say to start. Of course, we're not recording every transaction in Australia. This is just the transactions within our data set. But it's quite telling that because those declined quite sharply, you could maybe assume that, we probably did see a decline overall. And generally, word of mouth, that is what we're hearing around the ground as well, is just a bit of a slowing down in terms of that transactions. On top of that, we saw a bit of a slowdown in terms of those bigger sales, so anything above the sort of $10 million level. We certainly saw a bit of a slowdown. Potentially that could filter back to the fact that we are seeing slowdown in corporate activity as well. We're hearing that across a number of different states, that sort of corporate hotness that we saw in markets maybe just a couple of years ago, that appears to be cooling now. So potentially, we're seeing more family buying and more neighbour buying, and it's shifting a little bit away from that corporate side. So,
do you have an idea why that corporate is stepping out of the market?
Well, I think firstly it goes back to that number one point, the fact that, if you look at the 21-22 season, the 22-23 season, exceptional profit margins. It's important to remember at that point the Russia-Ukraine war had just kicked off. We had record wheat prices, we had record corn prices. It was also filtering into other commodities. We saw really strong dairy prices, we saw good beef prices. There were some very strong profit margins being made, but we're beginning to see those profit margins filter down. So I think from a corporate perspective, if you're looking at Australian agricultural land in sort of the 21-22 season, it probably looked like a really sound investment because you had good farm production, you had these very strong commodity prices, and at that point, of course, land prices weren't as strong as what they are today. So you look at the market now, you maybe question whether investors would be thinking the same about it when you have uncertainty regarding commodity prices, you have uncertainty regarding the geopolitical situation, the US trade situation, higher interest rates than we've seen recently, potentially not the best investment environment right now.
Paul, your report came out predicting that in May, a 25 basis points drop in the interest rate. Congratulations, you've already got one prediction, one score on the board. What effect do you think that'll have in getting foreign investment back in? You've mentioned there was a 38%, I believe, decrease in foreign investment. Do you think that'll come back?
Yeah, that's correct. So 38%, and yeah, like you say, so we are calling for another 25 basis point cut to take place in August. So we do firmly believe that we are well into a rate cutting cycle following a period of some hikes that we've seen. We're moving in the right direction, potentially slower than some people would like to see. But that should potentially be supportive in terms of that corporate activity. But of course, you have to weigh that up with the geopolitical uncertainty that we're seeing. a lot of that money that you see flow into Australian agriculture is actually from the US. You see about half of that money come from the US, which surprised me when I saw the figure. And, you have to look at this from a US investor's perspective. On the one hand, they might be saying, well, given the uncertainty that's happening into the US, maybe they need to diversify their portfolio more, maybe invest more in Australian land. On the other hand, maybe they might be adopting more sort of risk-off measures given all the uncertainty that's happening relating to the political situation there. So there's a lot of question marks. We don't think we're going to see the same sort of corporate activity we saw during sort of 21, 22, 22, 23. So potentially it could come up a little bit, but probably not back to the levels we've seen of recent.
When you say corporate, is it always international investment or foreign investment, or do you separate those two as well?
Yeah, so within this report, so the one that we're specifically talking about is foreign investment. So you can see this online on the FIRB website. So they track any foreign money that's coming into Australian agriculture and fishery over a certain threshold. So there's public data, which is very good on this that can be accessed.
So it's down around 38% down on the report.
Yep.
Community sentiment is not always a fan of foreign investment. So what have you found sort of anecdotally locally? Is that something that people are positive about, that less money's coming in or less foreign ownership, or is it something that's not come onto the radar?
No, I've definitely heard a few people mention it around the grounds. I think it seems to be gaining sort of traction, the fact that we are seeing that slowdown. I wasn't in Australia a couple of years ago, so I can't really compare to what the discussion was back then. But it certainly does seem to be quite a hot topic, depending on which regions you go to. So yeah, I think there's an awareness that there does seem to be a bit of a slowdown. And yeah, it is something that farmers seem to be talking about.
Now, miserable old Victoria, why? You had a survey out, or you got data that only 2% of Victorian farms intend to buy land in 2025, when the national average is like between 3 and 4%. Why are we so much less likely to want to expand our farm operations?
Yeah, so we run this survey. We do this every year. We've been doing it, I believe, since about 2017, 2018. And we'll ask farmers, and our clients, a list of different questions. For this specific report, the one we're most interested in is, that question: are you planning to buy property in the next 12 months? And it was really interesting for Victoria, actually, because only 2% of respondents said yes, we are to that question. So all the data we have going back to 2018 for Vic, that's the lowest score that we've seen. So it was a pretty significant number, and definitely shows a clear shift in sentiment. To give you an idea on the change, you go back a few years ago, it was closer to 10 or 11% of respondents that were saying, yes, we would be willing. So we're clearly seeing a shift. Again, I'd say potentially why. I mean, obviously, we have seen some pockets of dryness, of course. 2024, it wasn't a perfect season by any means. Why we've seen, I'd say it probably goes back to some of those key sort of macro factors as well, those higher interest rates, the commodity price uncertainty, the fact that we have seen those fertilizer prices remain fairly sticky. And I think, that's sort of filtered through to what we're seeing for Vic. I would say it's not just Vic that we're seeing a drop within those intentions to purchase. We're seeing a bit of a drop nationally. So it's not just Vic feeling the pain. It appears to be quite a few other states as well.
All right. You also mentioned in the report the grazing land values dropped more sharply than arable, especially in Victoria, our poor little state. Is this a new trend, or do you typically see a performance difference or a gap between the two land classes?
Yeah, so you typically, they never tend to be perfectly in line. You can see variation to variation. Of course, that transactions in the data set can play a big role in what's potentially impacting that. But we did see quite a big change for Vic, as you said. So if we look on the arable side, that was down 5%. If we look at the grazing, it was actually down 10%. And then the dairying was down 5%. So it was really that grazing that led the decline. Reasons as to why, again, it's a difficult one. I think, it probably would go down to the fact it may not have been the perfect season when we're looking last year. And then probably you look at the increase that we've seen on the grazing side. Well, you compare what happened last year to the sort of 4 years before that, and you could say, well, it's only a fairly small correction in terms of actually the drop-off that we've seen because of the enormous growth. So maybe just a little bit of a correction and a little bit of heat coming out of the market as those profits begin to normalise.
Yeah, great. So purchasing power really took a hit in 2024, as you've already touched on, all the high input costs, lower returns and rising overheads. Do you expect an improvement in 2025, or will affordability remain a key constraint?
Constriction?
Either or. I would probably say both, to answer you. So, no, it will definitely still be a hot topic, but it is showing signs of improving. The fertilizer picture, that's been one of the sort of key drivers. That's as that sort of key inflation point when we're talking about on-farm inflation. There are some signs pointing that we could see some lower prices. What hasn't helped us is the fact that the Aussie dollar, it certainly has weakened quite a bit compared to where we were just 6 months ago. Of course, we're very much reliant on imports when we're talking about fertilizers, so that's really driven up that import price. But when we look at our commodity pricing, well, we're fairly supportive for beef prices. The same can also be said for dairy prices. Grains, fairly neutral, potentially a little bit supportive. So when we're sort of looking at a commodity index of all those different commodities, the expectation is, as we head into 2026, the supply and demand dynamics look pretty strong, and expectations are not for weaker prices and potentially for higher prices. So although that fertilizer picture is still quite sticky, the commodity price picture is improving. So hopefully you would expect to see that should help profit margins and hopefully boost some purchasing power going forward.
So your national average there was 3% increase. Is that pretty standard state by state?
Yeah, so there wasn't really huge variation as we run through the state by state. In general, it was around about 3%. Yeah.
Just with the bigger drop in grazing land versus cropping land, when commodities come down and margins get better, will that jump higher for the grazing lands, less so than arable, or you can't predict something like that?
Again, it's a difficult one to answer. It is very much dependent on what happens in terms of those commodity prices and those markets. You can typically see with grains, maybe more supply shocks can take place around the world. For example, if you have weather issues in Russia for the wheat market, for example, you can see sky-high prices that can very quickly alter profit margins. We saw it take place when we had the initiation of the Russia-Ukraine war. That caused a big shock in supply markets. And that probably filtered through to land values for arable land quite quickly as well. You look at cotton as well, another example. So cotton prices have been pretty strong recently. They are coming off, but that's sort of supported the land market there as well.
Well, I guess the big question is, from a lending perspective, what are these trends made for farmers? Wanting to borrow, refinance, enter the market, valuations holding, softening? Is it a more case by case? And I guess more to the bank, what's the bank's feeling on this? Have they tightened lending, or are they feeling more comfortable about the stable market?
Yeah, so I think when you look at the market and so the environment going forward, in terms of confidence, I'd say we're definitely in a bit of an inflection point to some degree in terms of what potentially could happen going forward. Again, you can see that interest rate picture. It's showing signs of improvement. Like I said, fairly supportive on the commodity price side front. So all to say is that what we expect to see is fairly modest growth in that land price picture. Not really positioned to sort of comment specifically on how the bank will respond in terms of sort of the interest rate side, but the dynamics in general do show signs of some improvement going forward, and that's why we expect to see fairly modest growth in that land price picture.
Now, I've got another no idea question for you, because when I hear this, it sounds negative that we've got reduced land prices, and maybe what Ali just touched on then about the power to borrow because your land price is going down. But are there some positives for someone that's looking to get into the market? Having cheaper property around seems good if you want to buy land, if you can.
Yeah, no, absolutely. And, there's two ways you can look at it, and that is the positive side, that you can look at it like that, in the sense that prices have come off to some degree from some of their highs in particular areas. Not everywhere, of course. It hasn't been linear. There's some areas where we've still continued to see growth, and pretty impressive growth.
Well, in the Western Australia, you said it was quite significant over there.
Yeah. So we saw Western Australia was up pretty sharply, double-digit growth. So that was a pretty significant area where we did see some big growth for sure. But all to say is, there are potentially some pockets where we just haven't seen much growth at all. For some, that could arguably be an opportunity, and something potentially to look out for those potentially looking to get into the land market. So,
where's a hot spot? I did see a graph. Where's a hot spot? Where do I invest?
Well, I can't give you too much investment advice. I'm sorry, but no, sort of the areas where we did see some fairly significant decreases in that median land value, where we saw Queensland, New South Wales and Victoria, they were all down around about 5%. But the one that was down the most was actually Tasmania. So Tasmania...
Tassie,
yes. Tasmania was down about 12%. But it's still actually, in terms of nominal value, the most expensive.
Oh,
so,
right.
sorry to disappoint you.
Yeah, right. You broke my heart.
What surprised you most when compiling this report, and what kind of questions have you been fielding from farmers since it was released?
Yeah, so the challenge of this report, and you'll go around different parts of Australia, and obviously people want to know what's going on in their back garden and what's happening in terms of land prices there. Some of the challenges of this is the more granular you go, the less transactions there are. So if you have a fairly big transaction, it can potentially throw the whole of the percentage change up. So that's something that you have to really sort of analyze the data, understand it. We've really tried to highlight that in the report. So you can see a few surprising numbers, and that's just something that I suppose that we really just try and bring home to clients. So one of the big surprises of the report, to answer your question, was South Australia. So that was up around about 18% on a year-on-year basis, which again surprised me, particularly when you consider it was actually pretty dry last year, so it wasn't the best season at all. Again, you delve into some of that data, what potentially happened there. Well, what you actually saw was a lot of the lesser quality, smaller parcels. So they were really struggling to sell, so they were sort of hovering around on the market for quite a long time or not selling. But then the higher quality parcels, they were still selling for the same price or potentially even better. So that just drove up that median land price value and potentially inflated that number a little bit. So you just have to sort of understand the little caveats within those percentage changes rather than just reading the headlines.
So you actually look at properties on the market that's not selling as well as property like transactional sales.
So this will just be speaking with our valuation team regarding what they're potentially hearing on the ground. Predominantly we are focused purely on the transactions, but obviously they've got their ear to the ground and can sort of see what's going on within their specific market.
Well, Paul, that comes nearly to the end of this podcast. Any more questions from you, Ellie? Is off the top of your head?
Oh, I could ask a million questions.
Go on then, give us some more.
No, just on that note, you don't look at all on number of properties on the market not selling or the extended selling period. Have you noticed, I guess you're not including that in your data set because you're looking strongly at sales. Talk on the ground from your valuation team. Is there an extended selling period for rural land?
Yeah, so in general, we've heard that period is certainly extended from what we were hearing, particularly for on the lower quality parcel side. I don't believe as much in terms of sort of the higher quality parcels. I think they're still selling and selling well. One of the things we also noted is that we actually saw in some states, for example, New South Wales, we saw a lot of late transactions take place. So, transactions were taking place maybe in December time. I think you look at potentially why that happened. Well, initially the crop didn't look too strong as we moved into sort of middle of the season, but things got a lot better as the year went on. So there was just a few different caveats, I think, that sort of just altered that data for 2024, and we saw some interesting numbers come off the back of it.
Yeah, great.
Just to change track a little bit, Ali, you came up with a slogan. You said pine, shine and turbine.
Oh, I can't take credit for that. That's my darling husband.
Shout out to Dave. But we do have a fair bit of pine plantation in the area. There's some solar farms and some wind turbines just further down in South Gippsland. Does this come into calculations at all, and how is this affecting sort of traditional farm holdings?
Yeah, so this isn't something. So again, when we're talking about our data set, we are very much we will remove any transactions which aren't covering the grazing side, the dairying side, or the arable side. So
even transactions that go from say arable to solar.
So if that was within the same parcel, are you saying if that was sold?
Sold
out of say traditional farming blocks to one of those three.
Sure. So potentially that could be encompassed, but probably that certainly wouldn't sort of be the main bit of our data. We do very much try and focus specifically on those agricultural sales. So that would sort of be the type of stuff. We wouldn't really be including within the data set. Okay,
the final question. I've given you long enough. I did pre-warn you about this one, but our signature question is: what is something that you have learnt recently that actually surprised you?
Yeah, so mine, and again, it's a bit of a boring one, but I think it's really interesting. I'm saying it's boring because it's within the space that I'm covering in work. But I found out that Morocco holds 70% of the world's phosphate reserves.
Really?
70%. And I also read a figure that would be enough phosphate for about 1,000 years.
1,000 years?
1,000 years.
Worldwide?
Worldwide, yeah.
Why is it so expensive?
That's a good question.
Yeah.
No, it's so expensive because while supplies are actually quite tight, what you can actually see is Morocco, for example, they can sort of pick and choose when to export the price. When it's a good price, you can see higher exports. And also, you look at that other 30% of the market. That's actually quite a large percentage as well, but it's just not as much as what we're seeing there. But we're seeing some supply issues on that other 30% as well. So it's just keeping that price inflated because phosphate prices are extremely high at the moment.
Yeah,
so
they're definitely using supply and demand to their advantage.
Yeah, just like barrels of oil, I guess.
Exactly.
Yeah, there you go.
Yeah.
Well, thanks very much, Paul, for coming in. It's actually been really interesting. I didn't think it would be interesting. I like growing lambs, not talking about money, but I've been pleasantly surprised. And Ali, thanks very much.
You're welcome. I've loved it.
It's good. We'll get you back on for sure. You're here speaking at the Gippsland Ag Group for Rabobank tonight, so it's going to be a late night for you. A few of our listeners will probably be attending, so they'll be able to hear you twice, which is really good. So thanks, Paul, for coming in.
Thanks for having me.
Thank you.
A big thank you for tuning in today. And remember, if you have a question about today's episode or a topic you'd like us to cover, reach out to one of our many platforms and join the conversation. We're here because of your passion and commitment to agriculture. Together, we can build a stronger farming future.
This podcast is made possible by the Future Drought Fund Regional Drought Resilience Planning Program, co-funded by the Victorian and Australian governments.